Good morning, everybody. It is 8:47 a.m. Wednesday, January 24th in the 2024 year. That was so awkward. I don't even know why. It's January 2024, January 24th in 2024. And today is Tesla earnings. Today is the day that essentially determines if this market has some juice in it to even give Tesla some love. Yesterday, we had Netflix earnings. We're going to talk about that. We got some breaking Apple news this morning around AI and what they're doing with that. We got some China news in terms of them changing the reserve requirement ratios for their banks. We're going to be talking about that. But all of that stuff pales in comparison. It pales in comparison to Tesla. Because when Tesla talks, everyone has to listen. Tesla's the most interesting, exciting company in the world outside of Palantir, of course. And today we're going to be talking about Tesla. We'll do a little preview on them. We have Tesla earnings at 4 p.m. I go live at 3:45 for the market open, so I'll be there for Tesla earnings. And then by I think 5 o'clock, that's when the call will start. And we'll break down everything going on in the world of Tesla. So we got a lot of stuff to talk about. Thank you all for being here. Let's get into the market open. Top dasher, Dark Star, Kevin Smith, big day in the market, big day indeed. By the way, we got some stocks hitting all-time highs in the pre-market, so we got a lot to talk about from that perspective as well. Samrat, General Wellness, Brandon, Dax, Jacquees, Dale, Gift Magic, Tricora, Isho Sad, Rock and Robbie, Steph, Missy Iger, Brandon, June, General Wellness, Jim again. I was late just because I was finishing up a couple things. I did not go to the gym yet today. I did burn my 500 calories last night. By the way, starting off the week, 163 pounds. Today, 158.6. So it's coming down. And I know it's probably like 159, 160-ish after I eat breakfast and all that stuff. But I'm doing one meal a day, keeping the calories under 1,000, burning close to 500 to 1,000 calories a day. So 2 days in of working out. Today, Wednesday, is going to be the third day of officially working out. Didn't get to do it in the morning, but we will get the job done. Never give up. Lars, Sakam, Broccoli Bob, Robert, JD, Kevin, Victor Hernandez. Good morning with 700 exclamation points. I love that energy. Good morning. Good morning to you as well. Martin, Kevin, Erwin, Heavy D, Sundown Sam, Jason, Jeremy. Thank you all for being here. All right. Let's get into it. Midwest, thank you for being here. So I think we'll start off with Netflix. We'll get through Netflix and then we'll do Tesla preview and then Apple and China. Those are the things we got to talk about. Before we get into Netflix, let me just give you guys a quick rundown of what's happening in the pre-markets because we got some stocks that are going up. Again, the market is continuing to rally. We are not seeing a pullback. Even yesterday, we saw slight pullbacks in a couple of different sectors, but the market just continued to do well. And it's a very interesting time right now looking at how things are happening. Some macro PMI data we're going to get in a little bit as well. And so we're going to see if the United States is contracting, if we're still below 50. Last time we were at 49.2, probably expecting about 49.7. Below 50 is contracting, above 50 is expanding on that PMI data, and we'll see what's going on from there. But regardless of the macro, equities are doing good. Equities are doing really good, and the market continues to just keep giving them momentum. So here's what we got going on in the pre-market, and then we'll discuss Netflix and Tesla. So right now, we've got a bunch of stocks that are hitting some fun levels in the pre. ASML, a company we don't talk about too much, but it's in the semiconductor space. This is the reason for why I think Nvidia is hitting all-time highs right now. Nvidia's up ASML is up 5.6% after being up 1.53%. This is an $821 stock. So moving it up 5% is not that easy. Now, $306 billion market cap, kind of a little bit above AMD. Now, why is ASML moving up? Well, their fourth quarter bookings are at 9 billion euros. The market expected 3.2 billion. They beat bookings by about 6 billion euros. What does that mean for general investors, even if you're not invested in ASML? It means the demand for AI, the demand for chips, the demand for semiconductors is just going nowhere. I mean, it's just not disappearing. If a company like ASML can put up, 6 billion euros extra of demand or of bookings, that means demand is there. And that is why I was struggling to figure out why Nvidia was up in the pre-market. That's the reason Nvidia was up. Nvidia was at 606 at one point, right now at 603. But Nvidia is up primarily because a lot of these other companies are doing well in the semiconductor space. AMD is up 2.27% in the pre-markets, likely because of ASML earnings. SMCI, I would imagine they're green. Yeah, look at them. They're up 1.4% after being up 4.85% yesterday. They're at 464. I mean, they hit 485 yesterday, but they're at 464, which is just crazy considering they were at 390, a week ago. But they're doing well in the pre-market. So ASML earnings were pretty big, and another tech company earnings that showed off to be pretty good, and giving the market a lot of excitement. That $25,000 car, we'll talk about that in a second. That rumor broke last night at about 2 a.m. I was actually awake, finishing my Wordle of the day. I have to, how we do word of the day. I've been getting used to playing the New York Times Wordle of the day. I got it on the last try. I was so happy for myself. I don't have to ruin it for you guys today. So yesterday the word was relic, and I almost couldn't get it. I almost felt like an idiot. I was like, if I don't get this word, I'm an idiot. And I figured it out. I was Kobe in the fourth. I was clutch, got the job done. But I was up at 2 a.m. and the article broke from Reuters, and I was like, that's pretty interesting. So we'll talk about that. Okay, let's talk about Netflix real quick, and then we'll get to Tesla. So Netflix, 543 in the pre-markets, up 10.42%. Just absolutely incredible stuff by Netflix. They absolutely demolished earnings. Up 10% is not easy for a company like Netflix, for a company like Meta and Microsoft. These companies don't move this much. These are tens of billions of dollars. In the case of, Microsoft, Apple, hundreds of billions of dollars within seconds that are moving to the upside or downside. So the street liked their numbers. Now, why did the street like their numbers? We said that 25K car here before market open. That's true. We did say that. The reason the street liked their numbers is because of this. Let me just share this right here. The increase in guidance was spectacular, and the subscriber beat was phenomenal. So they beat subscribers by 5 million. The street expected 8.2. They came in with 13.2. 13.2 million subscribers. Now, the pushback might be, they got them from India and Indonesia and, all these parts of the world that the ARPU is just not that high. And yes, but because of their advertising business, they are finding ways to monetize without just getting that direct $15 or $12 a month from the end consumer. So that's really important for the street. The fact that they're able to get into more households. Netflix is a very sticky product. Eventually, when they raise prices, the street's willing to give them a premium and front run that growth by giving them share appreciation in the stock in the short term, which means that subscriber count is the core metric. Same thing for Palantir. Palantir's core metric is customer count. You get customer count to expand, you'll be able to eventually get net dollar retention to expand, and ultimately monetization, average revenue per customer will go up over the coming years. But for Netflix, it's subscriber growth, and they were able to figure that out. Their Q4 revenue, $8.3 billion. They missed slightly on EPS and they barely beat on revenue, but what mattered to the street was subscribers and guidance, and they killed it on that front. For the Q1, they expect to have their first $9 billion revenue quarter ever. So that's exciting. Operating income, operating margin is going to go up by more than 10%. Q4, it took a little bit of a nosedive because they were buying content, made sense, but that's still going to get better. And then they're going to double their net income. They did $938 million last quarter in profit. They're about to do $2 billion, $1.976 billion next quarter, which would be doubling their EPS as well, diluted EPS. So, look, their year-over-year growth in subscribers at 260 million, 12.8% year-over-year growth for a company like Netflix that is still so big, for them to be able to get more and more people across the world, to find 13 million more people to subscribe to Netflix. It's a big deal. It's a very, very, very big deal. And obviously the market was excited about that and was willing to give them the premium. Daryl in the chat says, can't share passwords anymore, forcing people to get the contract. This is another big thing. If you can't share passwords anymore, either you just say, all right, I'm not going to watch Netflix, or I'm going to subscribe. And it seems like more and more people are not going to Paramount, Peacock, HBO Max. They're consolidating into the big streamer, into the big players in the streaming space, which is Netflix. And if they're not going to be able to share the password, the question is, will they buy this, buy the subscription? And a significant majority of them, it seems like they were like, you know what? I actually care about Netflix. I'm going to buy it. And it's that kind of light bulb that goes off in your head. The first time I got YouTube Premium, I realized that, why don't I have YouTube Premium? I was going all throughout college, 4 years of watching the ads and all this stuff and just not having premium. I'm a power user of YouTube. I need premium. And once I finally got it, I was like, damn, I'm never going to cancel. I think they raised prices by $2 a couple months ago. I was like, all right, it sucks, but at least I own some Google stock, because you're just not going to let go of it. And I think the same lock-in has happened with Netflix for a lot of people that care about their content. Chris in the chat said a lot of analyst upgrades are coming in for a lot of names. Yeah, and this is a picture tweeted by Sachin today. Look at some of these upgrades. You got $600 price target by Evercore. You got JP Morgan 610. You got Pivotal Research Group 700, UBS 570, BMO Capital Markets 638. All of these guys have basically outperformed or either neutral or have a massive buy rating on the stock, getting it closer to $600 to $700. Remember when it hit $699 back in 2021, it had an epic crash to 160. I mean, it went from 700 to 160. If Bill Ackman doubled down on his Netflix bet, his first purchase was at 340. If he doubled down at 160, he would have an average of 250 and he would be up more than double. Instead, he took a $400 million loss and bought Google at 94. Now, he'll probably get his double on Google, but it's going to take more time than to get the double on Netflix, which, shows even the big guys that Bill Ackman only invests in about 10 names for, 10, 15 years. I mean, they only have a couple names and they're very long on those names. The amount of rigor that a name has to go through before it gets to his desk for him to ultimately decide to invest capital in it, it's a lot. And they went through all that rigor with Netflix and they still didn't have the conviction to double down. It just goes to show you, even the big guys struggle at the end of the day to remain steadfast with their convictions. But regardless, Netflix has been able to perform, and they were able to continue to do what they had to do. David says YouTube Premium is a must. Yeah, I agree. I think it's incredibly valuable. I get value for it, and I think a lot of people are finding value in Netflix as well. In order, for them to be able to subscribe. Sharing passwords is still possible in some Asian countries. Yeah, and that's the other thing in terms of Netflix. They're going to have more growth internationally because they're going to crack down on the international growth. They're having a lot of more exclusive content that is rooted in international audiences. And so when you couple that together with the fact that they're the ones that have the money to subsidize the creation of all this new content, not the HBOs and the Paramounts of the world, it seems like this is Netflix market to lose, and they're not planning to lose this market at all. So that's the Netflix preview. We'll talk more about Netflix after the bell. Apple and China, we've got them to discuss. We've got some breaking news on Apple in regards to what they're doing on AI. But before we get into that and before we get into China, let's do a Tesla preview of earnings. First of all, I'm going to put a poll in the chat, and I want to get the general consensus of the chat on if you guys are bullish on Tesla earnings or bearish. I think everyone is so bearish on Tesla earnings that it actually is making me think we should be bullish on Tesla earnings. And bullish just simply means the stock won't nosedive. Bearish means that it'll nosedive. The reason I'm saying this is because if you look at the past 3 quarters, historically it has fallen 9% every single quarter. Well, at least for the last 3 quarters after earnings. Elon either said something dumb. I mean, you got the margins going down. You got automotive business not growing as much. You got price cuts all across the board. And so there's a ton of reasons to be bearish, but I feel like everyone is so bearish, including the street. I mean, the stock's down a good 17% year to date, that there might be a reason to take the contrarian side and actually be a little bit more bullish. We'll see what ends up playing out. In terms of the numbers, so we've got EPS that's going to likely be down 32% year over year at 74 cents. Revenue is going to come in at $25.87 billion. That's going to be up 6.4% year over year. Energy business likely growing at close to 40 to 45% year over year, and the car business probably still stuck in that 9 to 10% year over year range. Obviously, the last quarter Q3 was up 9% on automotives. The core problems with Tesla is that they just cut prices in Germany. They cut prices in China. That's 25% of their sales. And FSD, although it came out to some customers, it is nowhere near becoming operational to the point where people would pay a $15,000 subscription to Tesla yet. And so that, you put that together with the Cybertruck that's not really free cash flow positive yet. And from Elon's perspective, it's not going to be free cash flow positive in a while. It's going to be hard to imagine that it's, immediately going to start to ramp up and that we're going to have a ton of tailwinds and not headwinds coming up for Tesla. Now, a rumor did break out late last night that Tesla's 25K model is going to be starting in June 2025. Okay, this is from Reuters. The next generation Tesla architecture, internally called NVNX, will include 2 or more models, to the 2 people and one of the initial sources. Now, remember, the Redwood factory is where this leak came from, because that's where Tesla is considering to pilot a lot of the creation of this stuff. But that is a rumor that broke late last night on Reuters. And the idea is that, hey, maybe we are going to have a crappy earnings and our earnings are just not going to be that amazing. But even if our earnings are not that amazing, we are still going to be able to kind of get investors excited in some capacity. And the way to get investors excited is by, touting the fact that we do have a $25,000 car that's coming up. So from Reuters, Tesla has told suppliers it wants to start production of a new mass market electric vehicle codenamed Redwood in mid-2025, according to 4 people familiar with the matter. Tesla CEO Elon Musk has long vetted fans and investors' appetites for an affordable electric vehicle and self-driving robotaxis that are expected to be made on next-generation, cheaper electric car platforms. Those models that would be at $25K would allow it to compete with cheaper gasoline-powered cars and a growing number of inexpensive EVs. Remember, Toyota Corollas and Honda Civics, they sell. I mean, my first car in 2019 that I paid for by myself, Daddy's money did not buy me the car. I went into the car dealership. Now Dad helped me negotiate. We got that bad boy from $24,000 to $21,000. An Indian father knows how to negotiate. And then I crashed the car 2 weeks later and had to pay $2,000 to repair it. So the negotiation really didn't help. But nonetheless, fun times as a 20-year-old buying my first car. Actually, I was 22. I was kind of late to buying the car. But I put down a $5,000 down payment. In about 8 months, the remaining 16 grand will be financed and paid off. And if a Tesla was 25,000, I paid 21,000 for the Honda Civic. I probably would have financed a $25,000 Tesla, even a $27,000 Tesla, because the experience you would get, the durability you would get. I pay for fucking oil changes every other month. Like it would be so nice to have a cheap electric vehicle made by Tesla. I was in a Tesla the other day with Carlos when I went to California. The experience was unbelievable. If they bring that same experience to a cheap, affordable EV, that's where I think the true S curve is. Obviously the bot is exciting. Everything is, there's a lot of components like Tesla that are exciting. Cybertruck is exciting, but most people can't dish out $100,000 for a Cybertruck. Everyone can dish out 25 grand, even at 6 to 7% interest rates to finance it. People can deal with that. My car payment every month is $311. Like, that's very reasonable. If that was $450, $500, that's not crazy. But, the question is, can Tesla actually be able to scale that? So, we'll see if they can actually do it. Kevin says, bro, when I get Indian clients, I know I'm about to get beat up. Yeah, well, dude, we negotiate. I remember my dad. I remember like it was yesterday, 2019. We walked in there. I needed a car because I started my own consulting firm back in senior year of college. Well, I started it like freshman year of college, but senior year in college, I got a really big client and it required me to drive a lot. And that client was, generating close to $7,000 in revenue per month as a senior in college. And I was like, you know what? I have my license. I should finally get a car. And so me and my dad walked into that dealership and they were like $26,000. And my dad was like, we're not paying more than 21. They were like $25,000. He's like, we're not paying. He's like 24. It's like, dude, I'm telling you right now, I will walk out of this fucking door. We are not paying more than 21,000. And the guy was like 21,500. And my dad was like, look, I'm sorry, man. We're not paying more than 21,000. And the guy got so mad. He was just like, all right, man, let's do the deal. And my dad was like, awesome. Great. And I just sat back and I watched this. I took a negotiation class in senior year of college, the second half of senior year after I bought the car. And they were talking about BATNA and all these, intellectual terms and all this shit. You guys have probably heard of that term. Best alternative. What does BATNA stand for? I always forget what BATNA stands for. It's BATNA is best alternative to a negotiated agreement, right? All these intellectual terms of negotiation. You just need one part of the textbook if you want to learn about negotiations, and it's called Be Indian. That's it. That's all you need to know. You don't need to learn all that other shit, to be honest. Like that seeing my dad do what he did in 2019 was way better than the 2020 class I took on negotiations. Because it was just like holding your ground and, and it was just having firm resolve. So, it was pretty cool to see that happen. Nonetheless, if a Tesla was at that price range, even if we didn't negotiate, I would be really excited to pick that car up in that mid $20,000 range. So we'll see what happens with Tesla earnings. I'll be live streaming it on the channel. Going to be super exciting. I don't think they're going to talk about a 2025 car. I think that's just a rumor that came out. I think the Cybertruck is going to be talked about, but it's not going to be that exciting because it's just not ramped up in production, even if demand is there. They do have to address global EV demand, which we are seeing with lithium prices falling, and maybe there's something to demand. Obviously, Tesla's a premium brand and they have the demand, but that is something to talk about given the price cuts. They have to talk about margins, and they definitely have to talk about how they're scaling the energy business. If they do that effectively and Elon doesn't say anything crazy, we should see a nice little, maybe 2-3%. If we're lucky, 5-6%. If we're really lucky, 10% move to the upside. And if they just don't say the things analysts want to hear, the stock's going under 200. And I think that's a massive opportunity, but we will end up seeing at 4 p.m., where it goes from there. Chris says, I just pretend to not hear their number. I love it. Congrats to your dad. He won. Dude, my dad did win. And then it sucked when I crashed the car 2 weeks later. The quick story on how I crashed the car. I blame Joe Rogan for this. I was driving back from that consulting client that I got, and I was driving on the highways, right? So I felt like a boss. I was awesome. Like I was whipping the highways. I had no problem. I was great 2 weeks into getting my license. And I pulled up into our driveway, and fucking Joe Rogan is playing. He's having this debate with someone. And I'm so into this debate that I'm listening that as I'm pulling into the driveway, and you have to like press the brake to like stop the car. That's like usually what happens. I like put pedal to the metal on the gas instead of the brake as I'm into the driveway. And then I crash into our driveway door. And like I didn't go all the way into the house, but the driveway definitely took, the door took a little bit of a fender bender is the word I was looking for. And then the car, I just looked at it and it cost $2,000 to repair. And I was like, damn. And that consulting client I mentioned, your first $7,000 a month, when 20% of it has to go to fix the car you just negotiated down $3,000. That sucked. That taught me a big lesson in what we call personal accountability when you have to pay for that shit. So that sucked seeing that happen. But, I was grateful no one got hurt or anything like that. It was the stupidest way to get into a crash. It was not on the highway, not I was speeding. I literally just ran into our driveway because I was so inundated with this fucking Joe Rogan debate that was happening. That was so ever since then, I've never gotten a speeding ticket. And now as I say this, I'm probably going to get a speeding ticket, and I've never gotten into an accident. So thank goodness, I've been a pretty good driver. My mom says I'm not a good driver when I'm in the car because I tend to go a little faster when she's in the car. I don't know why, but she gets so pissed off. And I'm like, Mom, it's not that big of a deal, but I don't get into any crashes and I never got a speeding ticket. Now I got pulled over once for speeding, but the guy looked at my record and he was like, dude, you've never got a ticket before. Like, I'm going to let you go. And I was doing 35 into 25. It wasn't that crazy, but I've been a pretty good driver in my opinion. Insurance. No, we don't want to go through insurance, dude. We don't want to go through insurance because it would have been a whole hassle. So I just paid it off. I got a good deal from a guy who's local to me, and $1,900 was pretty cheap for it. So wasn't too bad, but we got the job done. 3 years since my last speeding ticket in Germany. Okay, not bad. We got some good drivers in the chat. All right, so that's the Tesla preview. We talked about Netflix. Let's talk about China. We got the market open in 21 minutes. China just did some like good stuff for their economy, which is why Chinese stocks are pumping, but I don't know how sustainable it is. So every bank in the world has something called a reserve requirement ratio. And that reserve requirement ratio basically determines how much banks have to keep in reserves in order to make sure that customers are made whole on any deposits or things that they want to get out. China's central bank said that it will lower the amount of reserves banks need to hold, freeing up more cash for lending. Now, what's the logic here? If you're Bank of America, and let's just quick example, the United States says, hey, you need to hold 5% of all your assets on reserve. Well, then you have 5% less that you can loan out to small businesses, make investments with, get, a greater return, just investing in bonds, et cetera, et cetera. So if that becomes 3%, now you have hundreds of billions that open up for you to be able to put into the economy. That stimulates the economy. And as a result, that makes it easier for economic movement to happen and for banks to be able to make a return. The Central Bank of China is lowering the amount of reserves banks need to hold starting February 5th. That's going to free up about 1 trillion Chinese yuan, which is about 140 billion bucks. That's going to be funneled into new loans going into their economy. Now, this comes a day after they did the $287 billion package inside of the economy that they freed up from some assets they had overseas, and they pumped it into Chinese stocks. And yesterday, they kind of warned Chinese investment firms to not short stocks. They didn't make it illegal, but they just said don't do it. And when the CCP says don't do something, you kind of don't do it, right? So it's not like they made it illegal for Chinese investment firms to short, but if you're the head of a Chinese investment firm and the CCP is saying, hey, don't short stocks, and you are shorting stocks, you're going to get a lovely invitation into Xi Jinping's office for a beautiful dinner. And at the end of the dinner, someone might be eating your head. So from that perspective, Chinese investment firms are a little bit more weary to do anything messed up in the stock market in terms of shorting. Alibaba's up 1.86%. A report came out yesterday from the New York Times. Jack Ma was apparently buying about $50 million of shares, just acquiring more shares of Alibaba in the past couple months. So you got insiders who are buying. You got the stock market that got pumped with about $300 billion of liquidity yesterday. And now you got banks. The reason why it's up another 2% today is because banks have more money to loan out, which is good for Chinese stocks. NIO is up 5% right now. It was up 4% yesterday as well. And so you got these Chinese stocks that are pumping. BABA was at about 59 2 weeks ago. Right now it's 75. So it's making its moves higher. My fear is that some of these moves are more short-term versus long-term. At the end of the day, the Chinese economy is not in the best spot. And I want to play a quick clip kind of highlighting why it's not in the best spot. And if it's not in the best spot, there's, the government can't just stimulate it in these artificial ways. There's going to have to be something more realistic to get investors excited about investing in the Chinese economy. And until that happens, it's not really going to be that excited. As J. Kim says in the chat, $200 million buy by insiders of Baba. And that's what's getting the market excited about Alibaba right now.
And former chief strategist at Silvercrest Asset Management, which has $31 billion in assets under management. Patrick, all of this stuff that they've been talking about the last couple of weeks, does that boost your confidence in investing in China?
Well, the things that you just described, they don't sound like really market-oriented measures, right? Especially telling people not to sell. China has demonstrated in the past that
again, that's coercion. So it's not like they're mandating you can't do short selling. They're just like saying, hey, don't do it, right? Which is a friendly gesture to them.
Can put a floor under share prices if it wants to. And if that's what you're betting on, then fine. But if what you want to see is the doom and gloom aura that is over Chinese markets somehow go away, I don't think it's going to go away anytime soon, because the problems are deep and they're not going away.
And I mean, these moves are really kind of phenomenal to think of a government telling people to do all of these things after, by the way, that same government was responsible for talking down a lot of these companies and these stocks before because of the moves that they were making in the past.
And they've done it before. They've put a floor under the market, but they haven't addressed the underlying issues. And one of them is U.S.-China tensions. A lot of investors, both outside of China and inside of China, are worried about Chinese companies, as well as other companies doing business in China, being in the crosshairs of tit-for-tat sanctions. And I don't see those tensions going away. The other thing is, it's not just people outside of China worried about external issues, but there is a real sense of gloom over the Chinese market domestically. People don't feel like the country is going in the right direction under Xi. That doesn't translate into open opposition or criticism, but it does translate into a kind of despondency about the future of the country and the kind of moves that would really change things.
That money goes away pretty quick. I mean, it's like dumping a bucket in the ocean. You keep trying and trying.
Investors are scared, and that's the core point the strategist was making. On the poll we have 63% people are bearish. 36% of you guys are bullish on Tesla earnings. So 70-30 bearish, bullish. I would have to agree. I'm a bit bearish, but I think because everyone's bearish, it's going to end up being okay. But we'll see what ends up happening. Now, again, in terms of China, investors are just not excited. The optimism that the Chinese government is pumping into the economy seems like it's going to be short-lived, unless we see a real, I believe, sociological shift in terms of how the CCP is conducting actual business. I don't know if this pump in Chinese equities lasts. Now, I was listening to a couple of strategists yesterday that were saying that, well, if you just look at the Hang Seng index, it is basically starting to form a bottom, is at least what analysts are forming. And it's been forming a bottom for a while. And so at some point, unless you're entering into a 2008 level, catastrophic great recession, which some people are arguing China's in, but other people are arguing China's taking a decent amount of measures to stop that from happening. These equities should be having a bottom. And if they have a bottom, even if they don't go parabolic to the upside, they definitely shouldn't, break out Alibaba to the 40s, something like that. I don't know, because the CCP is the CCP. So if you're making a bet on that, you're really making a bet that things are okay on the government side, and maybe they will be. But at least you can see, if you're an investor in China, that the government is taking some positive steps to stimulate the economy. Not sure if those are going to be able to last. And so we'll see. Chris says everyone is expecting Lizzo on Tesla earnings. Wonder if Nicki Minaj shows up. Yeah, again, I think everyone is the most bearish they've ever been on Q3 earnings. I mean, I asked a bunch of Tesla bulls, and all of them are telling, they're just like, yeah, dude, the stock's it's gonna tank, because that's what it does. And maybe, the contrarian play is that it doesn't. Maybe it actually does. Where are we at right now in Tesla? We are at, in the pre-markets, Tesla's up a little bit. 212, it's up 1.6%. Where's Palantir? Palantir's up 1.9%. So the entire market's up. That's not really a Tesla move. The entire market is up. SoFi's up 2%. Yeah, I mean, the entire market's almost up 2%. Look at Enphase. Enphase is up 3%. Robinhood's up 2%. ARK is up 2%. Everything's almost up 2%. So really, when the market opens, we'll see what sentiment is like for Tesla, and if it can get out of out of that range. But we'll see where it goes in Q4 earnings. Okay, so that was Tesla. Let's talk about Apple. We got a breaking article today from the Financial Times on Apple that I thought was fascinating. Okay, I thought this article was absolutely incredible. And this actually made me way more bullish on Apple than the Vision Pro. Even though there were some videos that came out of the Vision Pro yesterday and everyone got super bullish of it because like it showed some use case with F1 racing. And I was like, okay, cool. I guess that's like, I've never cared about F1. I know some of you guys may hate me for that, but I just didn't care too much. But people were excited for that. I think the article I saw today from the Financial Times was way more bullish than everything else that I saw in the Vision Pro. And the reason for that is because Apple is finally saying, hey, all these AI device wearables, you guys, I mean, we talked about Rabbit on this live stream, that AI wearable that was reduced, that was announced at CES. They sold 60,000 of those units. You got Humane, which is another AI pin. I think they raised like $20-30 million there, selling out $700 of this like a little thing that attaches to you and uses natural language processing to be basically an LLM oriented device where you can talk to it, more multimodal versus just do it through text. I think all of these are applications that exist on the phone. I do not think that a separate hardware device is needed to be able to interact with these types of LLMs in the real world. You know, this idea that like you could say, hey, you could just tap on your device and say, hey, order me some toothpaste or something, right? Or it can scan the latest thing in your refrigerator and be like, hey, you're missing some cream cheese. We'll order you. Like all of that, I think can be done through the phone. And that's what the Financial Times reported today. Apple has been boosting plans to bring generative AI to their iPhones, and they're doing it pretty aggressively. According to a recent research note from Morgan Stanley, almost half of Apple's AI job postings now include the term deep learning, which relates to algorithms powering generative AI. That's not, something to just build a fancier UI for iOS 18. That's more sophisticated stuff. These are models that can spew out human-like text, audio, and code in seconds. The company hired Google's top AI executive, John Gianhandra, in 2018. Chief Executive Tim Cook told analysts last summer that has been doing research across a wide range of AI technologies and investing in innovating responsibly when it comes to new technologies. Apple's goal appears to be operating generative AI through mobile devices, aka the iPhone and the watch, which would allow AI chatbots and apps to run on the phone's own hardware at the edge and software rather than be powered by cloud services and data centers. That is huge. If they can vertically integrate LLMs that are using high amounts of computation on the device, which means low-key bullish for Enovix when it comes to those batteries, without having to connect to an AWS or a GCP or an Azure to be able to run all the cloud computing, that is stupid bullish for Apple. Apple has made more AI investments than any one of its peers, 21 investments since 2017. And at Apple's Worldwide Developers Conference, usually held in June, they're widely expected to be the event where the company reveals its latest operating system, particularly AI and LLMs in the context of Siri. And a quote by Igor Jakov, a chief executive of AI Enterprise Group, that made a lot of sense to me. He said they tend to hang back and wait until there's confluence of technologies, and then they can offer one of the finest representations of that technology. That is 1,000% correct. That is what every Apple product has been. The Vision Pro, they waited for Meta to release the Quest and like multiple versions of it before they came out with that. The Apple Watch, they waited till Samsung had some stupid watches, and they're like, okay, we're going to release the better version. Obviously, the iPhone, they waited a long time before they could really innovate on what that design would look like. They always wait until they're the leaders in a category, and then they come out. Another quick piece of DD, Apple researchers published a paper in December announcing they had made a breakthrough in running LLMs on device by using flash memory, meaning queries can be processed faster even if you are offline, not connected to a cloud service provider. And this breakthrough came in December by Apple researchers. I think the bull case for Apple is not the car that Bloomberg said they're working on in 2028. We'll talk about that later. It's not the Vision Pro. It's your phone becoming the actual device that runs LLMs for your day-to-day life. I think that's what's going to happen. And if that's what's going to happen iPhone 16, iPhone 17, if they have all of this shit, that's a reason to upgrade to iPhone 16. That's a reason to continuously have this upgrade cycle exist. And I think that would be that would be super exciting. Did I say his name was Jackoff? What is the guy's name? Did I say it wrong? Hold on. What is his name? I said Jackoff. Oh my gosh. He said Igor Japaklov. I said Jackoff. Well, you know where my subliminal mind is going. So his name is Igor Jablokov. And I said Igor Jackoff. Well, yeah, well, Freudian slip, I guess. Freudian slip. So, well, to be fair, Samsung gets something similar. Dude, no one cares about Samsung. No one cares about that foldable phone. No one cares about any of, the Galaxy innovations. It's all Apple's world. Apple is the one that makes it mainstream. Now, again, you could argue, well, Amit, why aren't you bullish on the Vision Pro if Apple's the one that's supposed to make it mainstream? I just don't believe humans want to wear something on their head. And maybe Vision Pro 3, I'll change my mind. But I really just don't think that's something that people care about enough. I do think people want to say, hey, Siri, can you, actually, order me a product? Or, hey, Siri, can you actually get me an Uber that's the cheapest to Newark Airport in the next 10 minutes? Siri can't do that. You ask that to Siri, she'll be like, I'm sorry, I have no idea what you're talking about. And it's like, dude, it's been like 15 years. Like, Siri should be able to do that. If they incorporate that into Siri, I think that's exciting. I think that's super, super, super exciting. All the Android people are mad at me now in the chat. I know Android's a thing, and I know most of the world uses it, but Android's not on the cutting edge of innovation. That's all I'm saying. If something's going to go mainstream, it's going to be because of Apple. So you just kicked off Siri on your iPhone. Interesting. I looked at my phone too, Matt. I thought it would go up, and my phone didn't trigger Siri. So that just goes to show it's not perfect yet, and eventually it will be. Nah, man, people like Samsung. It's just not in the US market, so mainstream media doesn't care. I'm not saying people don't like Samsung. I know they have the largest market share. I know in Japan and overseas, obviously I'm from India. All of my family has Samsung devices. The problem is Samsung does not make anything mainstream. That foldable phone that was such a big innovation, where is that? How many of them have they actually sold? Why isn't that mainstream? Why isn't every manufacturer looking to make a foldable phone? Like, they don't push the boundaries. Samsung just doesn't have the brand cachet, in my opinion, to do that. It's Apple. It's always been Apple. Yes, people will buy a Samsung watch, but at the end of the day, the Apple watch is what really sells. The AirPods, as silly of an innovation as that was, that happened because of Apple. And then you had all the competitors. So I think it's hard to deny, even if you hate Apple, that they are the leaders in innovation at the end of the day, even if you like, the Androids and Samsungs of the world. Arnie says foldable is an awful experience. Yeah, I never got that experience. Never. I never understood why people love the foldables, but it became a thing. Amit, have you tried using a Quest? Yes, I used the Quest and it was cool. It was exciting, and it was like game changing to me. It's awesome, amazing experience. It's not something I would use every day. That's my bear case for that. It's just not something I would use every day. By the way, Meta's not making any money off of it. Meta's plan to make money off VR is to sell ads in the metaverse. By the way, how many times have you heard the word metaverse in the past 6 months, right? It's basically become non-existent at this point. But their plans are to use the advertising business to subsidize the almost $70 billion they've lost on Reality Labs over the past 4 years. And investors have been okay with that. That's fine. But it's not like this thing is selling like crazy, that they're producing all these margins on it, or that the advertising business is benefiting from Reality Labs. They're not really selling ads in the metaverse yet. It's not happening. Because remember, the vision in 2021, when Mark changed the company to Meta, was that, if you want to buy toothpaste and Colgate is going to, put an ad in your feed, if you're not spending time in the feed, if you're spending times in this virtual world interacting with your friends and family, then we can show you a Colgate billboard inside of the virtual world, and Colgate will pay a premium to be inside of that world, and we'll make money on the upside from it, on the back end from it, if we control the entire infrastructure. That was Facebook's goal. I don't think people are going to want to stay inside that virtual world every day. Personally, I just don't see that actually happening. And if that doesn't happen, the metaverse advertising pipe dream is not real. At that point, you better make money off of the actual device, which is what Apple's doing at $3,500. God knows what their margin is on that device. So Meta's argument is, we're not going to make money off the device. We're going to make money off the user ecosystem. My qualm is that I don't think the user ecosystem actually exists. And if Apple doesn't popularize the Vision Pro ecosystem, it's definitely not going to exist, because Meta's not doing it. So we're going to see. We're going to see how this actually plays out. But it's going to be pretty exciting to end up seeing how this happens. All right. So let's continue to get back into equities. One person quickly says, Apple doesn't innovate, they follow people's lead. I agree, but they use the following of people's lead to then innovate, because they make it so much better, right? And that's the magic in Apple. Dude, why did people pay $4,000 for a Vision Pro? There's no rational reason. There is no rational reason you can tell me for why people actually paid $4,000. It's because Apple, took the developments in VR over the past 10 years and just made it somewhat cooler. And that somewhat cooler version of it is what got people excited to dish out $4,000 with taxes, and you buy the Apple Care, and they sold a case for $199, a stupid case that probably cost them $7 to make in China. They're selling it for $200. Like, it's ridiculous, but it's the Apple brand, and that Apple brand has a lot of power at the end of the day. All right, we got 3 minutes until the market opens. We're looking for a lot of exciting stuff. We got PayPal in the market that's up 2% right now as well. Let me pull that up as we get into the market open. Going to be really exciting. We got Developer Day tomorrow, or not Developer Day, but their Innovation Day. I'll be covering it on this live stream, and we'll be talking about it. Look at PayPal up 1.78%. What time is their day? Let me check it out right now. PayPal's Innovation Day, 12:30. Okay, so I'll be live 12:30. 9:30 Pacific, 11:30 Central. I'll be live 12:30, and let's see what they have to do. The CEO is chatting up a lot on Twitter. He's responding to everybody. I have high hopes for this day. I think they're going to announce some cool stuff. If we're wrong, the stock's going to tank. I think the reason the stock has rallied from 58 to 66 is because there's hype into Innovation Day. And if they really announce some cool innovations, they got earnings next week. I think this could set up for a nice rally in PayPal, but we got to see how that plays out. S&P 500, $487 in the pre-market. It is $3 away from 490, guys. I mean, it's just incredible momentum in S&P. SMH Semiconductor Fund, 191. It's up 10% year to date, outperforming QQQ, outperforming S&P. This is made up of NVIDIA, AMD, SML, SMCI. All of those companies are in this is the one Burry was short at like 150. I don't know if he's short anymore, but if he is short, it's not going to be good. We'll see when the 13Gs come out. And the other one, QQQ, I wanted to check. QQQ 427 right now. QQQ all-time high is trying to close in on 430. It is just absolutely incredible. The odds of a rate cut in March have cut from 77 to 40%, and the market is still continuing to just go higher. The market says, no, we're going to keep it going. We're going to keep it going. CleanSpark as well is up 3%. We'll talk about the Bitcoin stocks. Bitcoin's trying to struggle to stay above 40,000, but it's up 5% in the pre-market. It's one of the only miners that's doing well. Let me see some of the other miners right now. Yeah. Well, the miners are green. So all the miners are doing good. CleanSpark was only a miner yesterday that was doing pretty well. So we'll take a look at that as the market opens as well. But it's a green day. It seems like it's a green day, and you didn't need to wake up when September ended. I know I used the joke twice. Kill me. I'm sorry. Here we go. January 24th, 9:30 a.m. The stock market is now open. Wake your ass up. We are here. Meta, 52-week high, 390. There we go, folks. 1 trillion. It is officially hit 1 trillion. $390, up 1.4% on the day. $1 trillion market cap for Meta. There you go. Meta's there at $1 trillion right now. Google at 150. Look at that. So beautiful. Google at $150, up 1.24%. Psychologically, very important to see Google at this level. We haven't seen Google at this level for a while, so really nice to get Google there. Google's at 150. Awesome stuff. We got SMH at 191, QQQ at 427, CleanSpark up 5% of the day, Palantir up 1.64%, 1763, PayPal up 1.2%, 65.58, Tesla opening up 1.14%, 211, NEO is up 4%, $6.46, Alibaba up 2%, 75, Netflix $540. The street is not selling it off. It got a bunch of upgrades now to 650 to 700, 13 million subscribers, beat expectations by 5 million subs. They're going to double net income next quarter, growing 13% year over year. Netflix, $540, up 10% on the day. AMD's up 2%. NVIDIA up about 0.26% at $600, selling off a little bit from the pre-markets. SMCI up 2%, now at 460. ASML, big winner today. ASML in the semiconductor space, headquartered in the Netherlands. They beat their quarterly bookings by 6 billion euros. The demand for chips, the demand for GPUs, the demand for semiconductors, all of that is seeming to be well and alive. ASML up 7% on the day. Verizon selling off a little bit from yesterday's momentum, up 5%, selling off about 1%. Snowflake approaching a $70 billion market cap right now at $207. We'll talk about Snowflake in a second. Does it deserve to be at 70 billion? I don't really know, but Snowflake, the street likes it and they're giving it some momentum. S&P 487, it opens up. Let's look at Microsoft here. Wow, Microsoft, $400. Wow, Microsoft, $400. Incredible. absolutely incredible on Microsoft. Mag 7 are all green. Amazon's up 2%. Google's up 1.2%. Meta is up 1.2%. Microsoft up 0.82%. Microsoft is still undervalued cheaply. Not cheaply. It is, the market cap is less than Apple. Apple surging to 196 at 3.3 trillion. Microsoft at 401 at 2.99 trillion. The interesting thing about Apple, remember 2 weeks ago, it got downgraded across the board, and we saw the dip to about 180, and it's rebounded so nicely with Vision Pro and with just general kind of AI buzz. And it was a dip to buy apparently on Apple at 180. So whoever got the Apple 180 dip, you're doing well. People were acting like it was going to fall to 160, and it just did a nice rebound here at 196. Tesla up about 0.7%, selling off a little bit from the pre-markets. Nvidia at 601, Amazon at 158, and Google. If Google can hold 150, that would be very good for shareholders going into earnings, because if they have a good earnings, maybe we can make the next leg up back to 160, which is the all-time highs on Google, and closing on that $2 trillion market cap right now at 1.89 trillion bucks. Not bad at all. Not bad at all. Pretty damn good. Let's look at the miners on crypto. Bitcoin, 40,000. It's up 5% since last night, but it's been struggling in that $40,000 range. We'll see if it can stay there. Ethereum is up about 1%, 2,200. Riot is up 4%. Marathon is up 5%. Hut 8 Mining up 7%. Cypher up 2%. Iran up 3%. Robinhood up 1.64%. By the way, got some Robinhood news I'll get to in a second as well. Coinbase up 2%. And CleanSpark up 7.6%. 7.9%, the highest gainer out of all the miners. Not bad at all for CleanSpark. Maybe the bottom was in for the miners. It was really interesting last night. Bitcoin was tanking and the miners were green after hours. So it seems like the market said, hey, we think this is a short-term move on Bitcoin. We don't think this Bitcoin, momentum is going to last. Yes, it could drop to 30,000. And if it does, then sure, like these miners will be dead. Their stock's going to plummet. But if that's not going to happen, which I think consensus is 37, 36 is more of the bottom, then the miners are cheap, especially because as Bitcoin, approaches that 50, 60,000 level, these miners will do well. Now, that thesis has to play out, but it seems like that was the sentiment around the market, because you would have expected the miners to take a massive dump yesterday as Bitcoin took a dump, and that just didn't happen because it seems like they've been sold off pretty aggressively already. So not too bad for what's happening with the miners. Let me share a little bit of DD with you guys on Robinhood. This was absolutely incredible seeing this from the CEO yesterday. For those that don't believe that Robinhood is in a little bit of an interesting period, I think this tweet kind of shows the momentum that is happening on Robinhood. So this is from Vlad, CEO of Robinhood. There's been a surge in demand for our 3% IRA and old 401k rollover match. We're working hard with our partners to expand our capacity to meet that demand. Thank you, everyone, for your patience. This aligns with the DD I showed yesterday of someone on Twitter who showed that he got a text message from the company called Capitalize. Capitalize is a third-party partner Robinhood is using to roll over your 401k and your IRAs into different brokerages. And they set up an appointment with that person on Twitter, and they mentioned in the appointment text, hey, don't be late for this appointment, because if you're late, we're not going to get to you because we got a shit ton of other people to get to. So you better get here or else you're going to lose your spot in line. And it coincides with what Vlad is saying right now, which is like, look, we've got a lot of money coming onto the platform, and people are bringing their brokerages over. I talked to someone yesterday who has a very big portfolio. This guy's portfolio is very big, and he personally told me all of his assets he brought onto Robinhood. He got paid a hefty 1% match and 3% on the IRA. And then as soon as he got that match, he bought a shit ton of Robinhood shares because he was like, this is stupid. Like, the company's trading 50% in cash. They're giving me a crap ton of money to use their product. I'm not leaving the product for the next 5 years. I actually can't, or else I lose my match. But why would I want to leave if the product is so user-friendly? And I don't have any, loyalty to Schwab or Fidelity. This guy is like, we're talking tens of millions of dollars. Okay. So this guy's not like, everyone's like, oh, the people that are rich, they use Schwab and Fidelity and Vanguard. It's like, yes, a certain subsect of the population, really cares about that, divinity of the brand of the Schwab and Fidelities. But a lot of people that are rich also just want to get a 1% match because it's a lot of money on top of their assets. And they want to use something that's user-friendly, and Robinhood is pretty user-friendly. So you got a ton of people that are just looking at Robinhood like, hey, yeah, I'll take that 1% match. And then people are saying, well, how can Robinhood afford to do this? Netflix, by the way, up 11.4% right now. Remember, Robinhood makes money on cash sweep. Robinhood makes money on taking that money and taking the spread of that and putting into short-term treasuries. Those assets under management become very valuable to Robinhood when they keep you on the platform. The more money you have, the more money you're going to trade with. So getting you as a customer is all that matters over the next 5 years. They can do a lot with that And if the company was at $20, I would say, okay, this is pretty aggressive to do. The company at $10, $11, this is the right way to grow, in my opinion, even if it's not profitable over the next few quarters. This is what you want to do when rates are high, because they can only afford to do this when rates are high. When rates go low, they can't afford to do this anymore. And so it's exciting that they are, doing the strategy right now. So super, super cool for Robinhood. Hood lost money on him. Yeah, but look, the thing is, if you have that many millions, you're likely making bigger moves in the market. So the payment for order flow is going to make up for that on Robinhood. Given some of those investors might start spending a lot more money in trade on Robinhood itself. So super, super exciting stuff for Robinhood. Let's see what else is happening in the equity markets. PayPal now is red. So PayPal selling off, barely green. So we got, every time PayPal runs 2 or 3%, it gets sold off. This is why Innovation Day is so important, because to maintain the actual momentum that PayPal has shown, it needs to actually, prove to the market that they're not messing around. So it's going to need to show that momentum for things to get excited. Palantir up about 0.87%, Tesla up about 1%, nothing too crazy. AMD 171, Nvidia 602, Snowflake 208, Apple 195. The housing stocks are up a little bit. Matterport up 1.47%, Redfin up 2.3%, and Opendoor up 3.47% as well. Arnie says Hood makes money on the stocks of users also as well. Yeah, security lending. That's true. They can lend out your stocks. You can voluntarily participate in that if you are a user. And that is another way that people can make some money as well. Or Robinhood can make some money. Okay, let's do a couple quick takes of macro news, a couple quick headlines, and then we'll get into some other stuff that I wanted to show. So a couple quick headlines on the macro. We have obviously, Netflix did very well, and the stock market S&P is reaching all-time highs. U.S. mortgage applications have rose by 3.7% for the third week in a row. This is the third consecutive increase in mortgage demand to extend the 10.4% surge in the previous week. This is the sharpest increase in 1 year. Why is this important? Particularly, we were just talking about housing stocks. Last year was the lowest year on record for selling of homes in the United States in the past 20 years. Why is that the case? Because interest rates ran up, mortgage rates ran up to 8.4%. Now they're at 6.84%, and that's declining pretty much every month. So we're seeing mortgage applications start to go higher. People are willing to get in at 6.5, 6.7, and then refinance down the line. But at 8%, it was just a little bit too much, which is good because you need that housing activity. You need demand to pick up. And obviously, supply of housing is starting to increase. So that's going to lower the overall prices. And demand should be able to keep up with that supply. So that's one headline I wanted to show. We talked about China. China cut their reserve ratio for big banks. They cut that by 50 basis points. They released about $139 billion into the economy. That was incredibly important and a big piece of macro news that happened. And then finally, or two things, UK factory orders were weaker to show industrial trend orders. We're probably going to get the PMI report for the United States in about an hour. So we'll be looking at that later. But United Kingdom CBI industrial trend orders basically showed that market expectations are slightly below, or they came in slightly below the market expectations in regards to exports for factory orders. So nothing too crazy, but something to take into account when you're looking at overall PMI for the UK and if that's contracting or expanding. And then finally, last macro headline, South Africa's inflation rate dipped for the second month in a row to 5.1%. We've seen a dip in Canada. We've seen a dip in Germany. We've seen a dip in Taiwan. We've seen a dip in Sweden. We've seen a dip in Italy. All across the world over the past month, inflation, even if it's not come down dramatically, it's come down from 5.1% from 5.5 to 5.1 in December of 2023. And that's overall a good thing because we want to see all of these countries across the world not struggle at the end of the day to be able to control inflation. You don't want a Venezuela, Turkey scenario where you have triple digits inflation. So if you're a more developed economy, you need to see it coming down. And it's nice that it's coming down all across the world. Max says people buying will fuel inflation, right? To an extent. One of the things about China that we talked about yesterday is China is essentially going to be exporting deflation across the world. Okay. And the logical syllogism behind this is essentially if China is having a weakening economy, and there's a lot of issues in their economy, manufacturing costs are going to come down. Input costs are going to come down. Commodity costs are going to come down. Remember, China is the manufacturing center of the world. The government's going to print or not print, but they might print if they need to. But right now they have enough assets to just pump money into the economy. And if that's the case, a lot of these factories are going to want to export orders at a cheaper rate. And in order to export those orders, they're going to have to decrease the prices, which means U.S. consumers are going to have to pay less prices, or international consumers are going to have to pay less prices for Chinese goods. So the Chinese economy is struggling and not being at the most thriving of economies in the world. technically it's kind of good for deflation because that means the manufacturing hub of the world is going to have to export goods at cheaper prices if they want to be able to sustain their economy, because again, investor sentiment has gone to all-time lows on China, which means we should get some cheaper prices. So people buying doesn't necessarily mean inflation goes up, because this isn't the pandemic level where, there's only 10 laptops and they're all made in China and everyone wants a laptop and China's, barely able to get to the laptop. Obviously prices have to go up. Now people can afford a laptop. Laptops have become cheaper. The demand is there, and there's a crap ton of supply, especially a crap ton of supply coming from a part of the world where they desperately need to, increase their exports in order to sustain their economy. So that actually might, help U.S. inflation or U.S. prices, which helps deflation in the United States as well. Also says, what happens when Tesla energy and tech segments takes off and can match their auto production? What would the company be valued at if right now it's just valued as auto company? I do not think the company is just valued as an auto company right now. Even at $700 billion, there's definitely a premium in Tesla stock for a lot of other parts of the business. You may argue that, the premium is not baked in for the massive growth in the robotics and AI and energy business. That's probably correct, but there is a premium. I mean, it's trading at a hefty premium compared to a Toyota or a GM if you just look at their PEs. So they've got to really sell a different vision on today's earnings call. And I think that vision is not AI. I think that vision is not the bot. That vision is definitely not FSD. That vision has to be the energy business. If they smash the energy business and they really, remember, Tesla just bought a crap ton of land in Shanghai. That land can support 10,000 megawatts of their battery packs. If they can just keep building and building and building on top of that thesis, and the energy business shows it in the numbers, I think that's what investors are going to flock to. But they have to pretty much show that in order for it to keep going. And if they don't, and we get under 200, I don't think it would be the worst thing in the world. Speaking of Tesla, here's an argument that's a little bit more bearish for why EV saturation is happening and why demand for EVs is low. This is not the first person to talk about this. We've been seeing a lot of reports over the past couple of days. Ford cut down their F-150 Lightning production. So let's see some analysis on why the EV market is not in the best place when it comes to demand.
What to expect from Tesla's results? I want to talk to Garrett Nelson. He's senior analyst at CFRA. Give me the big expectation for you, and maybe if there's a surprise on your mind, what you're worried about.
Sure. Thanks for having me. No, we agree with Phil's preview. We think the focus will be on gross margins and also any guidance related to 2024. Now, on the guidance, we think they might not actually provide volume guidance for the full year. They might focus more on what they think their production capacity is. But we'll see. We know Tesla is coming off, Q4 was a record quarter in terms of vehicle production and sales. And the company has a really solid earnings track record. They've only missed once in the past 11 quarters. So we're bullish on Tesla heading into this release. The stock's had a nice dip so far this year after the stock more than doubled last year, which we view as healthy price action given the massive run-up that it had in 2023.
Do you think we're going to hear anything about this idea of whether he wants to stay as the CEO of the company and how important that is going to be? Obviously, he's made these comments about AI and wanting to have more control of Tesla if, in fact, they're going to be building out AI. And if he doesn't get that control, that he might try to build that AI outside of the company and the implications there?
We'd be really surprised if he addressed that on the conference call. We view those recent comments as mostly posturing. But he's in a bit of a standoff against the board. Of course, they're waiting a ruling in a Delaware court case regarding his prior compensation package. So we really view that as posturing ahead of a ruling from the court, which could come in the coming weeks or months.
And what is your take on, I mean, we sort of read a litany of headlines recently, including this Hertz news around selling some of these vehicles and the like. Do you look at that and say, I mean, part of you I hear is saying this is an opportunity in terms of just.
Also, while he answers, put in the chat, do you think the Hertz news spoke to overall EV demand going down, or was that Hertz just being stupid? I'm curious what you guys think in the chat.
The price fall, but do you think there's a larger macro headwind challenge to Tesla, or is it the EVs and Tesla's excluded? Is it idiosyncratic? How do you think about that?
There's no question that the U.S. EV market is in a state of oversaturation today. But the good news is that if you look at the EV price premium, so the premium at which EVs sell to the average of all vehicles. In December, that premium was only 4%, down from over 30% a year ago. So EVs are coming down in price much closer to parity with gas-powered vehicles. And so we think, really the market oversaturation, the issue is more with non-Tesla EVs. That's where the demand problem is. And in December, inventories were at 114 days supply for EVs overall. That's extremely high because the historic average in terms of days supply in the US is about 60 days. So, but we view that more as a problem for non-Tesla EVs. We know demand is very strong for the Cybertruck, and they face a high-class problem, which is how quickly can they produce these vehicles and get them in the hands of reservation holders.
Well, Garrett, that's
So that is why I think this Tesla dip is kind of attractive. Okay. You got a car analyst there that's basically admitting you've got 40 days more of supply than you should have when it comes to EVs. Okay. That can easily signal to any analyst like, okay, demand is coming down. But then you look at Tesla and you're like, wait a second. It's not Tesla that's having those EV supply issues. It's Ford and GM. And that's why they have to do the job cuts and they have to do the layoffs and they have to restructure their organizations. The demand is through the roof on Cybertruck. The demand is through the roof on a lot of these other cars, even if they have to lower prices. That's just to make it, more easier for consumers to ultimately make the purchase. But the demand is there for people to wanting to buy, and their margins are still 3x better than anyone else in the business. And so it's, as he said, it's a high class problem of how fast can we get these things out the door to even get to consumers, which is why if the market's pricing in a demand decline, which is what a lot of these downgrades over the past couple of weeks were stating, even Morgan Stanley, that's very bullish on the stock, thinks that global EV demand is stalling. If that's not specific to Tesla, I think that's where the dip becomes a true dip to buy versus a falling knife. I could be wrong on that. And, we could see, maybe it does go to 150. I think 175 is where it could legitimately bottom out. And that would be the end of it. But if EV demand is really a problem, then yeah, like Tesla stock is in a very tough situation, along with interest rates still not being cut yet. But if EV demand is a problem for everyone else besides Tesla, then maybe it's not a Tesla issue. Right? Maybe it's not a Tesla issue. Arnie says, I've seen a lot of negative reviews on non-Tesla superchargers. That's the other thing. The supercharging network is phenomenal and it's scaling like crazy. Every car manufacturer in the world is realizing they have to use that. That's part of something that I don't think is necessarily priced into the business. Jay Kim says Tesla has 16 to 17 days of supply, which is significantly lower than the 150 days the guy was talking about that some of these other car manufacturers have. On the Hertz thing, a lot of you guys seem to say it might be Hertz's fault. Thomas says they should have never bought EVs. It was too early for rentals. People will not know how to even plug them in and they don't have the infrastructure to repair them. I actually agree with this. They did the Hertz deal in October of 2021, if I'm not wrong. And at the time when I saw that happen, I kind of was confused because I was like, dude, if I ever rent a car, like, for example, when I went to California, if Carlos didn't pick me up in California last week, I would not have rented a Tesla. Not because I don't want to rent a Tesla, probably not. I doubt it's like that much more expensive than like a Toyota. It's because I've been driving a Honda Civic for 5 years. I know how to drive a gas-powered car. I know a Tesla's not the craziest stuff, but like just in terms of there's no Prindle, where like just go up and down. It's like all through software. Like I don't know how to use that. And I don't want to be on a new state's highway that I've never seen before, barely knowing how to operate the car. Whereas a gas-powered car, immediately you get into it, you know how to drive. It's just a regular car at the end of the day. So in the context of the rental market, the 100,000 cars they bought, that to me also never made sense. I don't think that's necessarily a question of consumers aren't ready to rent Teslas. It's just like people have an affinity to products they already know how to use, especially if you're renting a car in a brand new state and you're on a brand new highway and you don't want to get into a car crash on a brand new highway. So Mark says because you would have crashed into his garage. Okay, so the garage jokes have started. I should have never told you guys that story, but I tell you guys everything. So now the garage jokes are going to be here forever. But nonetheless, that's probably a mistake on Hertz. I mean, they didn't have to buy 100,000, dude. They could have bought 50,000. I mean, that was a low interest rate phenomena. Buying 100,000 Teslas like it was nothing. Yeah, dude, you can't do that. By the way, Hertz uses Palantir software. That was a deal they announced last year. So maybe Palantir's AIP was like, hey, sell some of those Teslas because you can't afford this shit. And maybe Palantir's the reason they had to get rid of some of those Teslas. So in general, dude, I think it's going to be really exciting seeing these earnings, but maybe EV demand is not a Tesla problem. Let's get back into stocks. Nvidia, where are we at on Nvidia? Wow. 610 on Nvidia. Oh my goodness. Oh my goodness. Tesla now selling off. It's just a little bit away from turning red, up 0.10%. Netflix up 13.5%. Goodness gracious. Holy crap, Netflix. Wow. Netflix is up. You got Microsoft is up $400, Google at 150, Nvidia trying to touch 610, CleanSpark is up 4%. Alibaba up another 1%, SMCI 470, ASML 832, Amazon 151. I mean, big tech is big tech. They're absolutely killing it. DWAC is down 14%. Even though Trump won New Hampshire last night, seems like he's going to be the nominee for the Republicans in the United States. But DWAC obviously went up 88%, so probably has to come down a little bit. That one's down 15%. S&P 486. TKO, this is the parent company of the WWE. They signed a $5 billion 10-year deal with Netflix yesterday. That's green as well. SoFi is barely up, but it's up. IWM, Russell 2000, 196. That's up. Arc Innovation up 0.38%. Robinhood up 1.14%. What else do we got? Affirm is up 1.2%. Square is up. Celsius still gets beaten down. Okay, I might be changing my mind on Celsius. I've been reading some DD. Speak of the devil. Reading some DD by this guy in the chat, Chris Mateo. And maybe I'm getting a little bit more bullish on Celsius. Let's go to TFC. Oh, wow. Look at TFC, 37.15. TFC doing a nice job trying to get to that $38. It did touch 38 yesterday, so let's see if we can crack on 38. But I've been reading more DD about Celsius, trying to understand it. Definitely not going to invest. I don't have the dry powder to establish a real position in Celsius yet. And I'm not as excited, dude, because I don't drink it. It's not a Peter Lynch play for me because I don't drink the damn thing. I like Monster. Like Monster is my drink. I like Red Bull. I don't like Celsius. And maybe I should try a Celsius because I tried one mango flavor and I was like, this is disgusting, dude. I don't know who drinks this. But, you know, a lot of people drink Celsius is what I'm seeing in the DD. A lot of people, whether it's at frat parties or whether it's at the gym or all this shit, people are drinking Celsius and they've controlled the brand. They have the distribution via Monster. Monster is just killing it with distribution. They're killing it with the brand. And so they're expanding to Canada and Ireland. You could argue that, look, even though the stock is up a lot, if you're in it for like a 2x, it's not crazy to imagine Celsius grows and the growth is just what carries the stock. Now, I'm not investing. I'm just not super excited about it, but I'm definitely not bearish on Celsius anymore as I'm looking at the growth. The thing I am bearish about is the valuation. I think the valuation is stupid, but the growth is there, just like Nvidia, to justify, maybe an outsized valuation. So, maybe Celsius is going to continue to keep doing well. Merv says, does TFC have more room to grow within a year? 1000% in my opinion. TFC, remember guys, TFC still has, 6.5% dividend. They just issued their dividend today. 5.6%. Now it's 5.6%, but you're still getting more than you're getting in a money market in TFC. And TFC, if you just look at the charts, TFC since, if you look at, so TFC was at 45 from 2018 to 2019. Okay. It was at 45. That's basically where it traded at. 2020, it falls to 11-year lows at $20. Then it rebounds for the next 3 years at around 62, 63, 64, 65. The next time it sees that big of a drop is because the Silicon Valley bank collapse. The fair value on TFC, if you actually just like go through the balance sheet and you take out all the stuff you need to take out, is $42 a share. And that's with all of the loan losses they have. When you take off those loan losses, that depends on interest rates going down. That's why inflation is so important to be able to monitor on these financials and regionals. Then the tangible book value of TFC goes higher because those rates come down. I think TFC is holding like $20 billion worth of losses. Bank of America has like $100 billion worth of losses. When those losses come down, you've got tangible book value that starts to go higher, and it's a bank that's growing. It's a bank that's actually, continuing to maintain momentum. It's the 7th largest bank in the United States of America. So I think there's a ton of upside for TFC, at least till 45. But the interest rates have to come down. If interest rates don't come down, it's not going to happen. So everyone's like, oh, Tesla will go up, Enphase will go up when interest rates go down. When the regionals will do well when interest rates go down. But we got to see, that actually play out. 612 on Nvidia, absolutely fantastic. Nvidia just killing it. I mean, shout out to Nvidia shareholders. Paul from Everything Money, we found out he was shorting the stock with his brother's capital, and he's not covering his short as well. At 580, I'm assuming the guy was like, all right, we're going to take a breather. Now we're at 612. And at 612, if you're assuming we're going to take a breather and we head to 613, 640, like I don't know. I don't know when this stops. Let's do some quick maths. 611 minus 480 divided by 480. NVIDIA is up 27% in the past month and a half. I mean, dude, it's incredible. Now approaching a $1.5 trillion market cap. Tesla 209, Neo 625, Alibaba 74, AMD 175, AMD up 5% of the day as well. Absolutely incredible. Snowflake at 207. Now, the thing about Snowflake, here's my question on Palantir versus Snowflake. Palantir is stuck at about 35 billion. Does Snowflake really deserve to be 70 billion? Rising stock-based compensation, Palantir's is coming down. A significant percentage of revenue spent on sales and marketing. Palantir's virtually, spending a lot less on sales and marketing given their boot camp approach to go to market. They're not profitable. And yes, they're growing 30% year over year, but that growth has declined from the 70% year over year growth they were having last year. And then you look at the product, and the product to me at the end of the day is just not a transformational product, even though it is a very good product. I don't know if it deserves to be worth double of Palantir. They're going to do probably, 2.8 billion in revenue. Palantir is probably going to do 2.4 this year. So I don't know if it's worth double of what Palantir is. Maybe, but so far the Wall Street is giving it a very hefty premium, and they are definitely excited for Snowflake. Is it too late to buy NVIDIA? My opinion, yes. I'm probably going to be wrong on saying that, but I would not touch NVIDIA at 615. Now, I would never short it at 615, but I would definitely not touch it at 615 because, we've had a string of green days over the past month, but, if you've been in markets for a while, the red does come. Eventually, the red does come. And when the red does come, it comes violently for stocks that have moved to the upside violently. Granted, NVIDIA's growth is probably going to justify the valuation to continue to sustain itself, but you can't tell me at 550, NVIDIA is not properly valued, right? Does it really need to be 612? I don't know. Does it need to be 475? Probably not, given the growth, but does it need to be 630? I don't know. So it's really hard to time it. If you're going to buy it, you really have to have a long-term thesis, because if you just want to buy it because of the hype, you could be severely disappointed or you could be severely rewarded, but you just never know when it comes to a lot of these stocks that have run up so much. He began shorting at 200. Yeah, Max, he was shorting at 200 to $300. So what he did is he sold in the money calls on NVIDIA. Okay. So imagine going to NVIDIA and you sell, a $200 call option for January 2025. That means you're expecting NVIDIA to get to $200 for you to make your money back if you sell the call that's in the money and it's that deep, down from the current stock price. You're going to lose your loss is unlimited when you do that. When you sell a call that's that deep into the money and the stock is way above your strike price. And I don't know what a strike price is, but I'm imagining it's, close. I imagine strike price is 150 if you started at 200, but it's probably in that $200 to $350 range. Yeah, you're going to lose a lot of fucking money, dude. You're going to lose a lot of money because the loss is unlimited. So it's not, it's pretty tough. It's pretty tough if he ends up doing that. Ryan, thank you for the $2 super chat. Is Rumble going to Wall Street Bets Moon for a little bit? Rumble's very interesting. I've looked at it. I don't think their financials are that exciting. I don't think their growth is that exciting either. I know revenue is growing 64% year over year, but it's at $64 million. I don't think the product is that amazing. It's down 9% of the day. Could it be a Wall Street Bets candidate? Absolutely. I just think it's very risky to have an investment thesis be Wall Street Bets to pump the stock. The actual business itself, it's a YouTube, right? They make money off ads. They're a YouTube competitor, and it's just not an exciting business, dude. Their main pitch is like, if you're, anti-censorship, you come to Rumble. And look, I think there's a market for that. I don't think the market is billions and billions of people. And I don't necessarily think the Googles and, Twitters of the world, now that we have Twitter as well, that has pretty much no censorship. Look, Google has censorship, but I don't think it's that crazy. I think it's crazy, but I don't think it's that ridiculous enough to switch your entire platform. And then if you really do feel censored, you can go to Twitter, and Twitter, everything's there for free, and it's a much better user experience than Rumble. So I don't know, dude. The core business case is not there. If you're buying it for pure Wall Street Bets momentum, maybe. But outside of that, it's not that exciting to me. Thomas says, Palantir question, do you think growing EPS is a priority in the short term, or do you think just achieving profitability was the goal and now they maintain profitability by reinvesting in growth? I think it's the latter. Palantir does not have to grow their EPS. Google has to grow their EPS because Google's not growing top line revenue anymore, right? Or not substantially, right? When I mean not anymore, it's not like, super, super high double digits. Palantir doesn't need to worry about EPS. They're a growth company. They need to worry about top line revenue growth. So if EPS just gives them GAAP profitability, even if it's a like a centimeter of 1 cent of GAAP profitability. That's all the street cares about. And that's probably what they're going to do. Now, if they can get that operating income to 100 million bucks, last quarter was 70 million, that would be awesome. That would be $1 million in net income per day for 90 days in the quarter. But if they can just keep EPS profitable and continue to maintain top level growth or like re-accelerate that, that's all they need to be able to do. Palantir needs to show 25% year-over-year growth. If Palantir does not do that, the street's not going to be able to justify the current multiple. Definitely not at 18, 19 bucks. Maybe at 13, 14, but not at 18, 19. So Palantir's in a peculiar situation. They need to have top line growth. And the Wall Street Journal article, I published this on my newsletter yesterday, dailypalantir.substack.com. If you're not subscribed, it's free. Make sure you subscribe. And I talked about the Wall Street Journal article yesterday, talking about government growth. And look, it's a real concern. I don't think it was a hit piece. Government growth is definitely declining. It's not as big as it needs to be. However, the bull case on Palantir, and this is what Karp has been arrogantly and being cocky about this when he's been talking in interviews, is that U.S. commercial is growing fast enough to subsidize the lack of growth in international commercial, international government, and U.S. government. If you take out SPACs, it's growing at 50% year over year. If U.S. commercial can continue to accelerate, and Karp said we might have to rebuild the entire company given the demand he's seeing in U.S. commercial. I don't know if that's hot air or if he's legit about that. We'll see it in the numbers on February 5th. But if that's true, they can afford, I would say, another 3 to 4 quarters of declining growth in every other sector of the business, because U.S. commercial will give them the breathing time to be able to figure the rest of that stuff out. And in 2024, it's an election year. You might not see a massive amount of government revenue piling in just because, there's a lot of instability in the White House. So if Palantir can grow U.S. commercial, and look, these AIP boot camps, I think they're scaling productively. I shared on Twitter the other day, Chicago, they're in boot camps right now in January. That should increase top line level growth. Investors will not care about every other sector of the business. U.S. commercial is really what could be the multi-$100 billion valuation builder for Palantir, and then the rest of the world can catch up to it. International government growth can catch up. International commercial can catch up. All of that catches up when the U.S. business leads. But the U.S. business has to lead. And I'm just skeptical they're going to get to 30% growth like some other people. I think if we can at least get 20%, that's what I think the street will be happy with. 25% would be, I would just be so happy. Below 20% is just unacceptable. So it's going to be really tough for them to be able to get that. Netflix is up 13%. That is correct. Netflix is doing incredibly well today. Anyone else? Options stimulate returns not working on Hood. Let me check right now. It might be an update. I did update the app yesterday. Let me see if it's not working. Sometimes that happens for me, Erwin. I try to do it and it's just like this position is closed and it doesn't make any sense. Yeah, it's working for me. You might just need to update the app or refresh it. It happens. Speaking of that, let's do an option simulator right now live. So these are my Google options. Okay. We got Google 175, 225 option call debit spreads. They are up today about 9.72%. Overall, up 16%. Okay. So if we just click this button, simulate my returns, and we slide the ticker to a higher price, it's really cool, dude. And some people might think it's not that serious. It's a really cool, feature. You can see how much you make. And so if Google hits 225 by January 2026, the max profit will be $32,000, which wouldn't be too bad. Now, I would probably sell before that. I would be very happy if, this position even doubles. If this position really does well, then we're talking about a quintupling, which would be awesome. Could Google get to 225 by January 2026? I think so. I think they can get to 200 by the end of this year just on share buybacks alone. I think the advertising business is not going to slow down, even though the ChatGPTs of the world exist. Most people don't really care about using LLMs right now. Generative AI search is amazing. They're growing search business 11% year over year. It did $44 billion last quarter. If Google can get that to $50 billion this quarter, or around $48 billion, I think that would be exciting. And so I think Google can do well. And so that's my big tech allocation. I really have no other big tech allocation besides Google. I have, obviously 15 shares of Tesla, but besides that, Google is the winner. Dope. I just updated it. Yeah, sometimes you just need the update and then it works. Can you close that position before it reaches the final price? Yes. This is something people get so confused about. I was talking to a guy yesterday, okay? I was talking to a guy yesterday who bought contracts on PayPal. He put 25 grand into, I think, $140 strikes for January 2025. He got the options at 50 cents a contract. The contracts today are worth $1.02. He doubled his contract, means he doubled the 25K. The 25K turned into 50,000 in a matter of a week, because PayPal obviously went up from 55 to 65, 66. And so the stock moved. Let's do some quick math on that. So 65 minus 55 divided by 55. The stock moved 18%. and his options moved 100%. The fun thing about options is you're allowed to sell these suckers before it reaches expiration and before it gets to your strike price. The strike price is just a tool you're using to have a directional understanding of where you think the company can go either on the upside or the downside. And that's why you need a strike price. And the strike price is incredibly important, and it determines a lot. And also the time determines a lot, right? If he had that expiration for earlier, he would make even more money because he would be taking more risk because the expiration was sooner, but he had leaps, right? But you're allowed to get rid of these contracts, and you're allowed to sell them, 10,000 different times. They're allowed to swap hands before they ultimately expire. And that's sort of, the fun of playing with the options markets. Obviously, you have to get the company right. You got to get the thesis right. You got to get the timing right. And you got to get the strike price right. But when you learn all four of those things, and I'm by no means an expert, but I'm learning that stuff, you can make a lot of money in this stuff. I mean, if you know how to really play it. So he doubled his money in a week, and the stock only went up 20%. Now the stock only went up 20%, but still, the stock moving up 20%, you double your money is not a bad thing at all. So those things are really important. As J. Kim says, options are priced on three things: volatility, time premium, and strike price. Yes, and me and TJ, we're going to have our options third episode of the podcast. We couldn't do last week because I was in California. That'll be on Thursday, and we'll be discussing pretty much these three things. We're discussing the Greeks. So we're going to be discussing all of that, beta, theta, all that stuff. That's important. As Toby says, you can also lose a lot of money. Yes, let me constantly say that. You can lose a lot of money doing this stuff. I don't do the monthlies or the weeklies when it comes to options. I follow the Chris Patel philosophy. He's been kind of my mentor in this shit. You pick 18 to 24 months out. You give yourself some time to let a thesis play out. You don't sleep horribly at night because your options are expiring next week. You give them time to mature, and within 6 to 7 months, if the thesis is not playing out, you take your loss. But if the thesis is playing out, which if you've done a lot of due diligence before you buy the option, you don't just willy-nilly on the option, and the thesis is playing out and you have enough time for it to mature, and even if there's some short-term volatility, you have time for it to recover. That's where I see the alpha in options, even if the gains aren't as substantial as if you bought short-term options, because the gains can be substantial if you pick the right stock, even if you have. I mean, look at Chris. Chris is up 300 grand on his Verizon position. He's basically doubled it, and he has like 20 months until it expires. So he has a long time for this bad boy to play out, and he didn't have to do monthlies or weeklies because he picked the right stock, right? And so that's important as well. Okay, I think that's it for me. Let me just show you guys this real quick. Quick announcement I just want to make on the stream, and then we will keep going from there. Then we'll do word of the day. I tweeted this out yesterday, and I actually got a lot of feedback, so I just want to show it to you guys and see if anyone would want to be part of this as well. So I tweeted this yesterday. Probably a good time to publicly announce this, but I am working on a new product. And I told you guys this about a month ago. And so now the product's basically 95% done and it's getting ready to launch. I had a call yesterday with a literal billionaire. The story is actually hilarious. I mean, it's incredible. Who was ready to invest as soon as I pitched them the idea. I'm not raising money at all. This is not an idea that is venture backed. This is not an idea that is $1 billion idea. This is an idea that maybe is going to be able to generate 50 grand a month at its peak in terms of revenue. So this is not a, $1 billion startup idea, but I do have a good network of followers, and there's, some billionaires that follow me that are interested in Palantir. And so I DM'd him a voice note for 2 minutes of me explaining the idea. I didn't ask for money or anything. I just wanted to get feedback because he's enthusiastic about Palantir, and obviously, given he's a billionaire, he knows what business is like. So I knew he wouldn't bullshit me, right? Like these people who are super rich, they don't like sugarcoat shit. They're like cutthroat dry. If your idea sucks, they're going to tell you the idea sucks, and they're not going to give a fuck. They don't care about your opinions, right? That's how they make their money. And as soon as he got the voice note, he gave me his number and he forced me to call him because he got so excited about it. And on the call, he was like, you got to think 100x bigger. So these billionaires don't know how to think small. But it was a really, really interesting call. He loved the idea. He thinks the idea is potentially a use case for a bigger idea. I am not going for the bigger idea. I do not want to go for $1 billion startup. I just want to go for very small, lifestyle business that can do well. But it was a really interesting phone call. This is going to be $5 a month. It's going to be very, very cheap. And I genuinely think the people that it will be targeted at will not hesitate to pull out their credit card and sign up. The goal I have is 1,000 paying subscribers by the end of 2024. It is going to be geared towards people who care about Palantir. So that is the hint I'll give about it. I learned a lot from previous mistakes and startups. This time, my core variables are, will people use this enough to not want to cancel the subscription? And is the subscription cheap enough where $5 seems like pennies for the value provided? That is the two things I've been obsessed with over the past couple months. Will people, when they see the $5 charge on their bank account, just be like, oh, yeah, I pay for that, and I'm supposed to pay for that because I love paying for that, and I don't care that it's $5 a month. And is the value I'm getting, either using a daily, weekly, or monthly, enough for me to not justify canceling the subscription? So far, the answer to both of those questions are yes. So this is probably launching end of February. I need beta testers. That's why I'm sharing it right now. If you are interested, please DM me on Twitter at Mid is Investing. I'll post my Twitter right now in the chat, and hit me up. We had over like 150 people last night DM me that wanted to be part of this. And so I'm giving it out to a lot of people. DM me on Twitter just so it's really easy to get you in there, and I'll send you the link to it. The product's 95% done. Let me just say, this is one of the most exciting and fun products I have built ever. I've been working on it for the past 2 months, and it's really fun. And it's one of those products where I think people will use it daily. And I think at $5 a month, it'll be $40 a year. So it'll be 30% off if you buy a yearly subscription. I think it's going to seem like fucking pennies when people see the value, and they're just going to take out their credit card and pay $40 a month. It is towards Palantir investors. It is what I believe is going to be one of the best products that exists for people if you care about Palantir. And look, I just think it's a really good product. I think it's a really, really good product. I've learned in the past from building products that people don't use, that people don't give a shit about, that people, may sign up for, but they never use. I've dealt with the pain of dealing with that when you build a product and you realize no one gives a fuck and no one's willing to pay for it. Like, I felt that pain very deeply. And so when it came to this product, I've been thinking about this for the past couple months now, and we finally put it into action. I was like, those are the core principles I have in mind. If no one's going to use it, then I'm not launching it, which is why I'm also doing this beta test, because I'll get enough user feedback by testing it with 200 people if people would actually be willing to pay $5 a month. That's the final question I have on the feedback forum. Would you pay $5 a month? And if most people say no, then we're not going to launch it. Then the market says we don't like it. But I really think a lot of people would be willing to pay for this because the value is extreme there. So it should be super exciting, and see what we get from there. Cheap enough that people forget to cancel. Yeah, that's the other thing. It has to be cheap enough that people don't want to cancel it, or they forget to cancel it, and they still want to be able to use it. So that's gonna be pretty cool. It's been talking to Meet Kevin on selling shit. No, actually, I got this idea before. Let me just say this very quickly, because I know some things have happened in the finance community recently. This is not a course. Let me just say that. Okay, this is not a course. This is not telling you how to become a better investor. This is not that. I know some people have been launching some courses, and a lot of people in different communities have not been that happy about the fact that people are quote unquote selling out and launching courses. Trust me, there's no one more anti-course than me. I don't like courses. I don't think they provide value, and I truly think most information on the internet is free. So if you're going to charge people a substantial amount of money for a course, you've got to be damn good at giving the information, or the information has to be so freaking proprietary, so life-changing that it's worth the hundreds of dollars you charge for it, because you're making basically 100% margin on an info product. Any product that has 100% margin, there's a fucking catch. A course is 100% margin. You make it once, you sell it forever. This is how Meet Kevin made millions of dollars on his courses, right? The psychology of money, all this stuff. Look, I like Meet Kevin, but I didn't like the courses. I think the courses are kind of like the psychology of money. You can just Google it, and you could find psychology of money tips. You don't need to pay someone $1,000 to learn that stuff. So if something has 100% margins, there's always a catch, and the catch is that you kind of don't have to do a lot of work to make a course. Once you do it once, it's done. So I mean, the information just has to be phenomenal for the course to be worth something, and I've just never valued that ever. So to me, that's not the most exciting thing. What if you sell a course for $5? Well, then I don't think people will pay the $5 because it's not worth it. $5 is not worth like, if you're going to pay a course, it has to be worth something because it's information. $5 a month, maybe people are signed up, but they're not going to say subscribe, right? This is a tech product. I honestly think a lot of people will like it. And I think it's very reasonable we can get to 1,000 paying subscribers. I've been talking to some, and again, the reason I talked to that billionaire yesterday, this guy owns a lot of Palantir. Like, I don't want to say how much because he told me, but like, take this chat's number of shares and multiply it by like 30, and he owns more than that when it comes to Palantir. He got excited for the product because he's such a heavy investor in Palantir, and at $5 a month, when you're a little billionaire, you're just like, there's no way in hell you're not paying for it. Now, I know everyone's not a billionaire, but if you're making at least, I don't know, 100 grand a year, 50 grand a year, 70 grand a year, $5 a month is not breaking the bank. So I think when it comes to a SaaS product, like Spotify, $10 a month for unlimited music, it's a no-brainer. $10 a month for the world's music at your fingertips. Like, people are going to pay that, right? Now, Spotify can't make any money off that because all that money goes to the record labels. That's a different question, but you're going to get people to sign up. So my question is, can it be so cheap that people really care about it and the value exceeds the, the price? And if it is, then we'll see what happens from there. So we'll keep it going. Amit, is it something AI? Yes. AI is heavily integrated into the product. AI is heavily integrated into the product. And that's another reason I'm excited to launch it, because it is using modern day technology via AI. I've been experimenting a lot with a lot of stuff in AI. I've been playing with it. I've been learning about it. I mean, it's really been an invigorating past 2 months of getting deep nitty gritty playing with this stuff. And it's exciting, dude. This is why I've been saying, like, my personal experience with the use cases of AI are making me more and more bullish on the sector, because it is just absolutely deflationary when it comes to productivity workflows. And it's fucking fun. Like, these products are like they're so interactive and you can use them every day. And there's a million use cases in my own workflow with the product I'm launching that I'm using every day. Like, my own workflow, I'm using it every day and I'm getting results and I'm like easily able to do what I need to do. It's just exciting, And this is the stuff that's super cool to do. Finally, waking up to AI. Yeah, pretty much. An AI Palantir share buyer. Yeah, of course. It's a bot that buys Palantir. It's nothing around investing in the stock. It has nothing to do with stocks. It's not a stock screener, by the way. It's not a fucking stock screener where you pay, $30 a month to everything money and they tell you, oh, the fair valuation of Tesla is $2. It's like, no, that's not what it is. I think it's a hyper niche product for a hyper niche community. And that's why I think the TAM, 10 to 15 million people globally care about Palantir. I would say about 1 million of them are on social media. I think if the stock gets to $40-$50, that number will probably 3 to 4x to about 40 million people globally, about 4 million people on social media, YouTube and Twitter included, that care about Palantir, and LinkedIn as well. So I think the TAM is about 1 million people that would reasonably buy this product. I think I can close in over the next 5 years on about 10,000 of them that would pay $5 a month. So I think reasonably we could do $600K in revenue a year. And that's not going to be full revenue because there's cost to run this product. So the margins might be closer to 65 to 75%. So it's not going to be pure revenue. But I think at $5 a month, it's so cheap to go mass consumer. And I think there's so many more people that care about Palantir that even if it's hyper niche, the marketing is hyper niche, the product itself might become so hyper niche that it becomes successful within that niche. And so we'll see what happens. We'll see what happens. Can you scale to all stocks? Maybe, but I don't want to because all there's too many AI products coming out for all stocks, and that's not really what I think Bloomberg's going after that. I think there's a lot of tech companies that are going after AI oriented stock screeners and stuff like that. That's not really my goal here. But theoretically, there is a business model that could scale to all stocks. But Palantir is the only company in the world that I think Palantir and Tesla are the only companies in the world this idea could work on. And Tesla's just so saturated. That story is pretty much played out in terms of media coverage, content coverage. Palantir, the story is just fucking starting. And the story is just being told. And there's so many parts to the story. The reason this works with Palantir is because there is so much damn content on the company every day. And there's an appetite I've seen over the past 3 years of people that want to consume as much as they can, myself included. I mean, the CEO, for goodness sakes, is releasing a fucking book this year. Like, there's just a lot of information when it comes to Palantir. And so people get excited. If you guys, again, want to be a beta tester, let me know. I'll put my Twitter in the chat. Please DM me on Twitter. We got a lot of DMs today, so I'm sending it out to a lot of people. And I want raw, honest feedback. If you think it's absolute bullshit, tell me if it's absolute bullshit. If you think, you would pay $5 a month, tell me that as well. But you will be able to beta test with it, play with it, and let me know what you have to say. Sunny says it's risky to bet on just one company. That is correct. It is risky. If Palantir shits the bed, this product shits the bed. So, I mean, that should give you a little bit of understanding of my thesis and conviction on Palantir, the company, if I'm willing to build an entire product around them. But it is risky. If Palantir goes out of business, the company goes out of business. I just don't think, Palantir is going to be in that situation. I think Palantir is in a very good spot, and I think 2024 is going to be good. If it's not, then it's not. We'll see what happens. But that's the risk that I'd be willing to take on Palantir. All right. That's it for me. Thank you, everybody. Oh, let's do word of the day. Word of the day. Okay. Wow. What a word of the day. We've been getting a nice string of words of the day. Gully washer.
Gully washer.
This is a fun word. A usually short or heavy rainstorm. Dude, could you imagine you're with your friends and you're at the bar and you walk out of the bar and you guys are drunk and you're about to go to another bar, you're bar hopping, and then while you guys are drunk and you just had some fried mozzarella sticks and it's pouring rain outside, you're the loud one in the group and you're like, man, this is a hell of a gully washer. And let's say you're a Brit. Yeah, this is a gully washer, mate. That's Australian, but whatever. You get the point. This is a gully washer. Your drunk friends would look at you and punch you in the face and you would not even feel the punch. You would feel like the Joker in The Dark Knight. You would be laughing hysterically because you found a way to use the word gully washer that I think 0.0% of human beings have ever used in that scenario. This is why we do Word of the Day. This is why we do Word of the Day. This is why. The farmers rejoiced as the gully washer replenished their parched fields. The residents of the desert town knew how to brace themselves whenever dark clouds gathered on the horizon, signaling an imminent gully washer. I don't think it has to be a short or heavy rainstorm. I think if it's just raining in general, I would be using this word. This is a word that's not leaving my subconscious. This is a word I will use. This is absolutely a word that I would use. This is great. This is absolutely a phenomenal word. 0.0%. Dude, who knows the word gully washer? Put it in the chat. No one used the word. No, like it sounds like a British word. If anyone's British, let me know. But who has actually heard of this word in the world? There's no way, the 571 people in the chat, no way anyone has heard of the word gully washer. I would bet a lot of money that like maybe 2 people have heard of this word. This is a good word. Exciting word. Absolutely exciting word. Fun word. And you got to be able to implement this word into your work. You have to operationalize this word into your workflows. Dude, I did a video. I'm using so much weird terminology now. I did a video on reviewing Mr. Beats' chocolate on Twitter on Sunday. Or last Saturday, by the way, the chocolate sucked. It was disgusting. But I got to the second chocolate bar and I was like, I'm kind of bearish on this chocolate. And the comments were like, did this guy just say he's bearish on the chocolate? But like these investing terms are just like popping up in my day-to-day life. So it's there. All right, that's it for me. We'll be back on market close, 3:45 p.m. Tesla earnings are today. Regardless if you're a shareholder in Tesla or not, this is if you're interested in the financial equity markets, this is the earnings that matters. It'll be really interesting to hear how Elon Musk and everyone talks about the company. And obviously the market is going to be affected by Tesla. They are one of the biggest companies in the world, one of the most important companies in the world. And they are definitely a signal for kind of if the market can continue to rally, or maybe the market rallies and Tesla tanks. We'll see what happens, but it's going to be exciting day. 3:45, be here. We'll have 15 minutes until the market closes. 4 p.m. we'll get the results, and then I'll try to get some guests. I'll try to hit up some guests today that'll hop on the stream with me. Maybe Carlos will hop on, and I'll get some other people, and we'll have a nice little party for Tesla earnings. All right, that's it. Thank you, everybody. Appreciate it. I can see you guys 3:45, and we'll be back for Tesla earnings. Bye, everyone. Have a good one. See you guys in a couple hours.